Hi everybody, it's AJ speaking. Today I want to discuss with you what is really going on in the Chinese EV market based on data published this morning. Here on this first chart you see monthly total EV sales in China. And here in the latest months in June 2025, you see there were 609,000 pure electric vehicle sales in China. Year to date, so after 6 months, the market already grew to just over 3 million vehicles and is up 34%, and June was up 33%. So you can see right off the bat there's enormous growth in this market. The trough that you see down here is very typical for the Chinese market. This is primarily driven by the Lunar New Year holidays. During this period, for roughly 2 weeks, sales tank. On top of that, China has typically very cold winters, and this also affects significantly negatively the Chinese vehicle market. For example, if you look back to 2024, you can see also a massive drop in February. So for this reason, what you should take away when you hear negative headlines about Tesla in March, when they report on February vehicle sales number out of China, that it's very normal to see a significant drop there. So this next chart here is actually more interesting. This chart shows you revenue generation with electric vehicles in China. So this is battery electric vehicle sales revenue. The numbers that you see are shown in dollar billion. So in June, the market reached 12.6 billion in sales just for that month. And year to date, after 6 months, the market grew to 62 billion in sales and is up nearly 22%. If you remember the prior chart, and we jump quickly back, so June grew in terms of volume 33%, and the year is up 34%. But revenue is up in June only 18%, and for the year only just under 22%. That already tells you there is something going on, and that vehicle prices must be dropping. Otherwise, how can revenue growth be slower than volume growth? So this next chart provides part of the answer, and you can see in this chart the number of electric vehicles on offer. So this chart shows the number of different models, brand new models Chinese consumers can choose from. And you can see there's a very strong upward trend. So for instance, in June 2024, last year, there were 185 models, and this has now grown to, in June 2025, to 231 models. This is an enormous 25% increase. And obviously, the more models you have, the more vehicles compete for the same customers. Despite the Chinese market's large size, the market is simply oversaturated with offerings, and this makes it very challenging for any model to generate sufficient revenue, as you will see later. This chart brings everything together that we observed earlier. So there is very rapid volume growth in China, but revenue growth is flowing much slower. And this is what this analysis confirms. This shows average selling prices for battery electric vehicles in China. And you can see that average prices from June 2024 at a peak of $23.4 or $23,400 decreased all the way down to $20,700 in June of 2025. Up here you will see the year-on-year change, and you can see that for several months the year-on-year change was negative. And you can see down here on a year-to-date basis, on a volume-weighted basis, the average price dropped to $20,000 or a drop of 9%. The decrease in average selling price is an indicator of increasing market pressure or competitiveness. This chart looks at how many vehicles on a trailing 3 months basis the main or basically all the automakers sell. This market captures almost 100% of all automakers. It captures all large, medium-sized automakers in China. There are a few tiny automakers that are not included in this analysis, but the sales that you see in front of you cover 99% of the market. You can see BYD is number 1, sold over 400,000 vehicles over the last 3 months in China. Geely number 2, sold 275,000 EVs in China. Number 3 is the SAIC General Motors joint venture at 170,000 sales. They sell mostly very low-cost electric vehicles. And number 4 is Tesla at just under 130,000 sales. A few things to point out here. These are all Chinese companies, also the SAIC, General Motors joint venture should really be classified as a Chinese company for all purposes. If you look down this list, there is no Japanese, no Korean player, no German player, except when you go very far down and you see down here BMW is at number 15, but is only selling on a, call it quarterly basis, during 3 months, only 21,000 units. Down here are all the rankings, because the lines become so small that you really have to look down there. You can see Toyota is selling in the market also with JV. BMW we talked about, but if you look over here, Mercedes sells very small through the BAIC joint venture, hardly any sales. So bottom line is the Chinese clearly completely dominate their home market, and the only foreign-controlled automaker that plays any role is Tesla. So in this next chart, we look at the electric vehicle market in terms of dollar revenue generated, which in my opinion is a much more relevant metric than just looking at vehicle volumes, because it makes a huge difference whether you sell a huge number of very low-cost vehicles or a slightly lower number but much higher value vehicles. And this is exactly what we can learn from this chart. When you remember the prior chart, or we jump real quick, you can see Tesla is only, in quotes, number 4 in volume. But then when you look at revenue, Tesla is a strong number 2. BYD is number 1, generating $7.7 billion in trailing 3 months revenue. Tesla is number 2 at generating $5 billion revenue. Geely is number 3, $4.6 billion in revenue. And Xiaomi is already at $2.8 billion before it could start selling meaningful volumes of the just launched U7 product, which is an SUV that is very comparable to the Tesla Model Y. Both Xpeng and NIO just under 2.5 billion. However, this analysis is still not telling us what's really going on. But before we get to it, let's just look at market shares, because this is also often a point that is, in my view, misrepresented in mainstream media. It is true that Tesla's market share keeps decreasing, but is a function of, number one, the market's rapid growth. Apple, for example, experienced the exact same thing in the smartphone market. And the second big reason we get to in the next chart. So this chart shows you how many models each electric vehicle seller offers. And you can see that at the moment in June, BYD offered 30 vehicles and previously sold over 25 vehicles. Only Geely sells as many vehicles, so both of them have a huge offering at the moment and have had a massive offering for many months, and it keeps strongly increasing, as you can see in this trend. The second biggest seller in terms of product portfolio breadth is SAIC, GM joint venture. They have 21 different models. SAIC, so pure SAIC, so without GM in the mix, has 15 different models. And Dongfeng has 12 models, NIO 11 models, Chery 11, FAW is an old legacy Chinese automaker, 10 models, BAIC also old legacy Chinese automaker, 9 models, GSC also old legacy Chinese automaker, 9 models. Then Xpeng, considered one of the newer Chinese pure play EV makers. BMW has 6 models, and then a bunch of others with a few models, and the clear outliers in this group, if you remember the prior data, is Xiaomi with 2 models and Tesla with 2 models. Just something to point out here, this analysis comprises consistently of domestically produced vehicles, which represent like 99% of electric vehicles sold in China. Tesla does sell Model S and Model X in China, but because they're not made domestically, they're not included in the analysis. The reason why I excluded them is because of tariffs and other considerations that actually create more noise than what they add to the analysis. Since all these vehicles are manufactured domestically, they all play at least on a somewhat level playing field. So why did I say Tesla and Xiaomi are outliers in this overall mix? For that, let's just jump back to this chart, which shows you the revenue. You can see BYD number 1, Tesla number 2, Geely number 3, Xiaomi number 4. So wait a second, these two, Tesla, Xiaomi, only 2 vehicles, and Xiaomi just recently added a second one. So until just a few weeks ago, they had only 1 vehicle. So all the numbers prior to June are based only on a single vehicle. It was not even an SUV. Geely on the other hand, BYD on the other, they have huge product portfolios, as this chart demonstrated. So these are completely two different beasts, and that's why, first of all, you cannot just look at volume to assess the competitiveness of a company. Number two, not even revenue is sufficient, because it makes a huge difference whether this revenue was generated with just one or two models, like in Tesla's and Xiaomi's case, or in BYD's and Geely's case, where they have like over 2 dozens of models on offer. And just to be clear, these models, these are not carbon copies of one model. It's all the same platforms. No, of course they use a much smaller number of platforms, but these models are really different. They have even different wheelbases, and body is very different, interior completely different. Of course they share a lot of small parts like buttons and stuff like that, but they are really distinct vehicles. And then when you think about it in terms of production complexity, etc., economies of scale, all these vehicles have, almost all of these vehicles have vehicle configurations. So in terms of BYD, Geely, you end up with a huge number of possible permutations or variants a customer can configure, while in Xiaomi's and Tesla's case is much more limited. It's only a tiny fraction. And that's why these companies have an advantage over these bloated companies, which are only hunting market share at the moment. So now we go a step further. Now this chart shows how much revenue was generated by model on a trailing 3 months basis. And this is where it gets really interesting. So you can see that Tesla's Model Y is the number one, generated almost 3.6 billion over the last 3 months, despite the new Model Y launching, ramping, etc. Xiaomi generated a highly respectable 2.7 billion in revenue with the SU7. The SU7 is a vehicle that is very comparable to the Model 3, and because their first vehicle was such a resounding success, I expect that the U7 will do exceptionally well. And then number 3, there's the Tesla Model 3, generating almost 1.5 billion in revenue. Then, and I'd like to point out, these 3 vehicles, Model Y, SU7, Model 3, they all fall in a similar price bracket. But the Geely Star Wish is a tiny vehicle and sells for roughly a third of what these other vehicles sell, and it sells at very high volume, and that's why it generates a still respectable almost 1.3 billion in revenue. But this is like a different animal, because you have to consider that higher price point vehicles almost always have a significantly higher margin than significantly less expensive vehicles like the Geely Star Wish. So in terms of like from an economic perspective or from an investor perspective, you need to pay attention to these details. So the bottom line is Tesla can make money with its products. Tesla sells enough revenue, sells at an attractive enough price point. So does Xiaomi. Although even Geely Star Wish is number 4, it might not be very profitable at all. And then when we go further down the list, revenue tanks very quickly. So BYD's main product by revenue is the Seagull, which is also a more lower price point vehicle. It's a smaller compact vehicle, sells for around $10,000, followed by the BYD Song Plus EV, sells for around $15,000, which is roughly half of what the what Tesla's products sell for in China. And then comes the XPeng's Mona M03, which is also a vehicle that sells for roughly half the price, or a little above half the price of a Tesla in China. And I think revenue per model is really the key metric when you want to assess a automaker's performance. Then on this slide, we look at the market share, but not in terms of volume, but in terms of revenue generation, because again, I think this is much more meaningful than looking at the volume metric. And when you do that, you can see a few things. Number one, Tesla Model Y's market share keeps decreasing. Again, big reason is market is exploding with different vehicle offerings. Everybody tries to sell something. There are massive discounts, huge marketing campaigns, etc. Everyone, all these many new models, they all nibble a little bit on the Tesla Model Y. And of course, as this influx and continuous increase in other offerings increases, you would expect that the Model Y is losing market share. Again, a very good analog is Apple's iPhone. Apple's iPhone, after only a few years, went into a many-year downward trend in terms of sales. Here, Xiaomi again stands out as a strong number 2 with the SU7. I expect the SU7 to lose market share as Xiaomi brand fans increasingly move to the now latest and greatest Xiaomi, which is the U7, the SUV product. So when we look at the Tesla Model 3 sales trend, so the refreshed Model 3 was launched here. This is why you see this significant drop. Tesla was selling off in August, September inventory, and then in October was re-ramping production on new vehicle, and it returned to roughly 5% market share, held this market share for quite some time, and then in sort of the first quarter of 2025 had quite strong performance, but the market share increase that you see is significantly driven by the market shrinking in the first quarter overall, and this market share drop that you see after the first quarter is significantly driven by the market expanding quite a bit after the typically weak Q1. Q1 is the first quarter, of course. So before I let you go, let's just summarize sort of the key takeaways from this data. Number one, the market in terms of volume is growing very, very quickly. Revenue of the market, and I'm talking purely about electric vehicles, is also growing at a very healthy rate, but significantly slower than volume. This drives an erosion in average selling prices and signifies an increase in competition. Next, the significantly increasing number of available models further demonstrates the increasing competition. Hence, the widely reported Tesla market share loss or slowing vehicle sales is not a sign of Tesla weakness, but more a sign of just the crazy competition that's currently taking place in China. The last piece, and one that I could not cover in this video, but will do so in the future, is we need to look at the financial performance of these companies, which is quite abysmal, and to complete the picture. So the bottom line is, from an investor's perspective, the Model Y continues to perform amazingly well, number one. Number two, Tesla is not only the only non-Chinese automaker which does well, but continues to dominate. I can't emphasize it enough what a monumental achievement that is. There are a couple of other important factors, but they become more accounting heavy and complicated, but I will try to cover those in a future video. I hope this was informative. I post most of my research on X, so I recommend you follow me on X. If you invest in stocks, I highly recommend you subscribe to my research on X because I share deep dive investment research, and my hit rate is exceptionally high. With that, see you in the next one. Bye.